Hello and welcome to lesson number 6, high probability trading strategies. In today's lesson, we're going to talk about reversal strategy and a breakout strategies. These are well-known strategies used around the world to consistently take profits in the market. All right, in lesson number 5, we talk about support and resistance. And if you apply support and resistance to the reversal strategy and the breakout strategy, you're going to enhance your probabilities of success. All right, so let's discuss them right now. Today is the last lesson on this mini trading course, which will give you everything you need to get out there, start practicing, and start making money. All right, high probability trading strategies. I'm going to talk about a regular divergence, which is a reversal strategy, and a breakout strategy. And as I discussed and I said, enhancing strategy by adding support and his resistance will simply increase your chance of success. So what is a diversion? Diversion is a study of momentum which only checks whether the price and the indicator agree or disagree. If they're in sync, the price should continue on the same route. If not, it is likely that the price will reverse to the other direction. So applying a good risk to reward money management rule with at least 1 to 1.5. The strategy I'm giving you is more than that, and I'm going to show it to you. So what is a good example and a bad example of a diversion? So here's what I'm talking about. On this first chart, we can see that the top here is price, and you see the green line. So price is making higher highs, and the indicator down below here is making also higher highs. So everything agreed. The indicator and the price agrees. Now below here, we're talking about price is on the red line. Price is going up while the indicator is going down. Now you're asking me, what are those indicators? I'm going to leave a link below so that you can actually see the top most popular indicators and their definition. The most used ones are the moving averages. This is the MACD, and this is the RSI. So anything you put out there will give you diversions. All right, let's look at this classic bullish diversion strategy, where you can clearly see in the chart here the price is going down. You see the blue line, there is a bottom, and then you're going to a lower bottom, okay, lower lows. Now what's happening with the indicator? It's having a higher highs. Okay, we're going to go into the chart and take a look at it right now. Okay, so what is a good example of a divergence? All right, so this is the Euro USD Forex pair, and any chart that you open up there, you are going to see divergence. Okay, so here's a very good divergence which is happening right now. The price here is going down. You see here, it's clearly going down. And what's happening with the indicator? This is a stochastics indicator. If you see here, this bottom matches this bottom, and this bottom matches this bottom. So the price is going down and the indicator is going up. So it is likely that the price will go up. Okay, now how can you enhance this strategy? What I told you is applying support and resistance. So we have a divergence happening right here. So do you see any signs of support or resistance? Well, look at it. Support and resistance is kind of walls. If you draw a line right here, you see that the divergence is happening right around a support area. So this is a high probability trade. All right, so this is divergence for you. If you want to see another one, this is another one that happened here. So the price is going up, and what's happening with the indicator? Look at down here. This is a top, and this is another top which is lower. So what's happening? If you put in, so let me put in the mouse here. So see, look at here. This is the top, and this is the top of the indicator, and then you have another top on the price, and this is another top here on the indicator. So the indicator is going down while the price is going up, so they're not agreeing, so the price is likely to go down. All right, so perfect. This is a great reversal strategy that you can apply on the day-to-day. This is a daily chart you can use also on smaller time frames like 1 hour, 4 hours. If you go lower than that, the probabilities are a little bit lower. All right, here is another strategy, which is the breakout, well known around the world. And if you look at what we're seeing in the screen here, you can clearly see that there is a range. Price is bouncing between support and resistance, and what happened? The price broke out of this range and continue. So how do you trade this strategy? So it's clear here. You can see the stop here. This is your stop loss. This is your entry point on the bar that broke out. Okay, and you're going to go for twice. This strategy gives you a 1 to 2 risk to reward. Okay, so your take profit point is at twice the distance of your stop. So let's say the entry here and the stop is $10. You want to go for a minimum of $20, and you can see that it clearly reached that point. All right, okay, let's see another example of a breakout. So this is another breakout. There's a range here and the price breakout. You can see the bar number 1 is just exploded to the upside. This is in a very explosive bullish market, and this is a strategy that you can use. You can add a 20 EMA or a moving average of 20 days to the chart, and a strategy that you can use is you just follow along the price, and once the price breaks below or closes below the moving average, you're going to exit. All right, this is a very profitable, and this is a nice way to use this breakout strategy. Now let's look at it when it does not work. All right, you can see here that nothing works 100% of the time. That's why you have to have a stop loss and you have to have a plan. The price is definitely trading here in a range, and it breaks out, as you can see on bar number 1 here, but then it just fails down below and we will have hit your stop. This is the fake out. Okay, all right, last but not least, it is another great example here of another time where price did not work out. There's clearly a range here. The price is bouncing between support and resistance. You can see here clearly that the price does not want to go down, so there's a range. And what happened here? The breakout actually happened in the middle of the range. You have this massive bar, right? So what happened? If you would enter here at the close of this big green bar, it's likely that you will not succeed, and it did not succeed. All right, all my trainings and our trainings over here that we provide are hands-on, so let's look this in real time. All right, again, this is the Euro USD chart, so let's see if we can find price that breaks out of a range. So this is a huge range over here that you can see. Let's draw some support and resistance lines over here, right? So you can see here that the price is definitely trading around this area. Now, how do you actually draw the support and resistance lines? You actually want to do ranges, right? So the market is not perfect, it's random, right? So put in a couple of lines here so you actually see perfectly there is a range, but you can see that the price is bouncing around, right? Very clear that the price is bouncing around this support and resistance area. And look at the green bar. You can see that when it breaks out, it hovered around the top and then it broke out on this big bar. So if you would enter on this big bar and you have your stop loss somewhere around here, about 50 to 75% of this range, you would enter and you continue on to twice your profit, and perfectly this one succeeded, no problem. Now let's see on Bitcoin chart right now is really hot. Cryptocurrencies are very hot, so let's see if we find some ranges, and let's see if we find what succeeds and what does not succeed. All right, look at here on this chart right here. Okay, again, you want to draw ranges, right? Market is not perfect, right? Look at visually, you can clearly see here, right? This is a range here. Price is bouncing around the support and resistance area, and look what happened. You have this big bar that broke out of the range, right? Now what happened? The breakout happened from the middle of the range. Okay, so if we look at our examples here and we see the fake out that I showed you, this is a rule. So if the breakout happens from the middle, it's most likely a fake out and it's not going to succeed. Okay, and what happened on this 1 hour chart of Bitcoin? It broke out from the middle and then it just fell down. So this one did not succeed. Now let's see if we find another one that succeeded. Well, this is happening right now. Look at right here. We have definitely a support and resistance line over here, and this is 1 hour chart. Price is bouncing around support and resistance, and the price broke out. Now, how does it break out? This bar over here has to be higher than this bar over here, which is the top of the range, and it is. So it is a breakout. You put your stop loss at somewhere around 50 to 75% of the range, and as you can see, the price broke out and it's continued to move up. In this case, you already had your 1 to 2 risk to reward. So guys, fellows, ladies, thank you for watching this mini trading course that we provided to you. Hopefully you have benefit from it, and I hope you continue to study the charts, practice on your demo account, and go out there and succeed in the market. Don't forget to subscribe. Thank you and happy trading.